Are you looking to invest in the stock market but don't know how to? Or want to invest in equity mutual funds to grow your wealth but confused how to begin with? Or are you a smart investor who knows reducing cost can be a good decision to make for long-term wealth creation? More often, the easy way is a smart one. In this video, I will tell you about a simple and cost-effective way to invest. In fact, lakhs of investors these days are choosing this method, which does not take too much of effort or time to research and easy to track and manage as well. If you enjoy our content, do like the video and subscribe to our channel, and also press the bell icon to get new video updates from DSP Mutual Fund. This really helps us to increase our reach and reach out to larger audience who can benefit from this knowledge and invest better. As you have probably guessed, I am talking about index funds today. Let's begin by knowing what these are. Index funds are passively managed mutual funds that track a benchmark index like Nifty 50, Nifty Next 50, Sensex, etc. and attempt to mimic the index so as to generate returns as close to the index as possible. But what's an index exactly? As the term suggests, it's simply a basket of securities or any other financial instruments that represent and measure the performance of a specific sector or a specific market, an asset class or a strategy. For instance, if you invest in Nifty 50 index fund, you're essentially buying the stocks of top 50 largest companies in India by size listed in NSE. So if all that's happening is an index getting replicated, what's the role of a fund manager here? In an index fund, the fund manager's role is limited to buying and holding securities similar to the index in composition and proportion with lowest possible error. This means lesser portfolio churning, less human biases, and with minimal human intervention, the related fund expenses are also lesser. What does this mean for you? Significantly lower cost of investment as compared to actively managed mutual funds, in addition to the benefits of inbuilt diversification. Since buying one unit of index mutual fund would mean buying a whole lot of securities at one go. The portfolio of an index fund is also easily trackable and transparent to an investor, and it is also regularly rebalanced so as to ensure that the composition remains similar to the index, and as an investor, you don't miss out on any market movements. The next question in your mind probably is, are index funds right for me? So a simple answer to that is, index funds are suitable for all kinds of investor. If you are a new investor who's not consulting a professional advisor, selecting the right funds for your portfolio can be a difficult task. With index funds, life is easy. For instance, if you want to invest in a banking sector index fund, you can pick up any banking index by any AMC, since all of these are going to be similar in principle. However, you must compare the expense ratios and tracking error of these funds before you make a final choice, as this may make a difference. For seasoned investors who already have an existing portfolio of active funds, adding index funds to their portfolio will not only reduce the cost but may also to an extent reduce the risk of underperformance over a shorter period of time that is brought by active funds. However, this also has a flip side. Active funds at many times may outperform index funds, especially when the markets are on rise, and you need to keep that in mind. An interesting fact for all our viewers. As per the latest SPIVA India scorecard published by S&P Dow Jones Indices, a world index provider, a significant number of active funds have underperformed their respective indices over the last 5 years, with the period ending September 30th, 2022. And this should not surprise you if index funds are gaining popularity over the past few years. In fact, this category of funds have been doubling in size since January 2017 till now. As the data suggests, more and more investors across the world and in India too are embracing index funds and making them a key part of their portfolio. And this should not be a surprise considering the many benefits these funds offer to all kinds of investor. So go on, ask for index funds today for yourself also.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.